Hey guys, Alicia Godfrey here with Keller Williams Excel Realty, the Godfrey Group. Wanted to break down something that's been on my mind a lot lately, and that is why are these interest rates going so high? So I did a little bit of research and I've talked to a lot of my lending friends, and basically the Federal Reserve's job is to make sure that the economy is humming along at kind of room temperature. So the last few years, our economy has been crazy hot, which has been forced a lot of people out there to do a lot of spending, including in my industry, in the housing industry. So we don't want our economy to get too cold with a recession, and we don't want it to get too hot with this insane boom that drove housing prices through the roof. So, I bought my house 10 years ago and it's worth twice as much as what we paid for it now, which is amazing for me as a homeowner. But if I was trying to buy this same house today that I bought 10 years ago, it makes it extremely challenging, especially if you're a first-time home buyer. So the Federal Reserve did what they do, and what that does is it impacts the interest rates that our lenders are able to offer us. So in March, for example, of this year, the interest rates started going up from high twos, low threes into maybe the 3.5–4% range. What that did is it decreased the house price that my clients could shop for by about 10% when it went up that 1 percentage point. So if you went from 3 to 4, instead of shopping for a $400,000 house, you are now shopping for a $360,000 house just to be able to afford that same monthly payment. So as buyers, my buyers are now asking me, well, should I even be buying a house right now? Like, it just seems crazy. And I would tell you this, our inventory levels are still very low. So if the right house comes along and it's the right house for you, my advice would be to buy it. We are telling people you marry the house, but you date the interest rate. You can trade that interest rate down the road through a refinance, and you can get the lower interest rate. By buying the house now, you're also locking in what's likely going to be a lower price, because we are planning to still see our house values continue to appreciate over the next several years, because again, the inventory levels are low and someone will always need housing. So if you don't buy it, somebody's going to buy it. That will then contribute to prices continuing to go up. And then you're just going to be shopping for houses that are less expensive next year or less nice next year, because that less nice house is now going to be the $360,000 or the $400,000 house next year. Okay, so that's that. Now, what if you're a seller? What does this mean to you? Well, sellers, we've been super spoiled over the last couple years. With these low interest rates, it drove a record number of buyers out into the market, and they were willing to do just about anything to get your house. But in the last 3 to 4 months, we've really started to see these buyers become much more picky about what they are willing and not willing to take. So we're starting to see the return of people wanting home inspections. I know that got waived for a while. We are starting to see the return of buyers wanting to be able to ask for repairs. We're starting to see the fact that instead of 20 offers on your house, you might get 1 or 2. And quite honestly, you don't need 20 offers on your house. You need 1. You can sell your house to 1 person. So that said, it's still a great time to sell your house. The inventory levels are still low. Buyers are still shopping, but you need to be aware that if your neighbor got the record-setting number in the neighborhood and they had 30 offers, that they are your comp. If you have the exact same house that your neighbor had and they sold for $450 and they are the new standard, and there's 2 or 3 other houses that have also sold for $425, $435, they're all pushing that $450 number, the odds are pretty good that that's what your house is worth if it's comparable to those other homes. But if a realtor sits you down and we give you our honest opinion of the market and we say, yeah, your house is just as nice as that one, I think we should list it $450, do yourself a favor. Listen to the realtor and don't try to overprice your home in this market. In the last couple of months, we have seen a huge shift in that mentality, like I mentioned to you, and buyers who've been out in this market for a while are finally starting to stand up and say, we've had it and we're not going to do it anymore. So you don't want to overprice for the market. Trust me when I say, if your house is going to be worth more than $450 to someone, they are going to bid more than $450 on your house. The market will take care of it, but you have to sell your house twice. Once to the buyer, and more than likely, unless you get a cash buyer, once to the appraiser. So we want to make sure that that offer price you put on your house makes sense. So listen to your realtor. If I'm not your realtor, find a good one that's doing the market research for you and keeping ahead of the trend in this market to determine if it's hot or cooling. And right now, we're in a very weird phase of the market where we're seeing a little bit of both, depending on where your property is, what the asking price is, what the condition of the house is. So it's important that you hire a pro to walk you through this process. If you want me to be that pro, feel free to call me, 614-579-8907. I'm always happy to talk to you about real estate. We'll catch up with you soon. Have a great day. Bye.